Welcome back to the Pro Ticker Podcast, your Tuesday morning edition covering major financial magazine headlines, everyone. We are kicking off the first full trading week of the year with two absolutely massive shockwaves. And they seem totally disconnected, but they're both driving the global markets.
Yeah, it's a wild start. Monday's action was this dizzying mix of geopolitics on one hand and, high-tech innovation on the other.
Exactly. So on one side, you have this stunning intervention in Venezuela, which just sent the energy sector into a massive rally.
And then on the other, CES 2026 kicks off in Vegas. And according to all our sources, this is officially the start of the next brutal phase of the AI chip race.
It really is.
That's right. And what we're trying to do for you this morning is synthesize a whole stack of reports on these twin stories. Our mission here for this deep dive is really to connect the dots. From Wall Street analyst notes all the way to tech reporting to help you see exactly how these huge events are driving everything. We'll trace the money from crude oil to chip stocks and even, to things you might not expect, like Bitcoin.
Okay, let's jump right in then. Let's start with the event that just defined the weekend, the Venezuela shockwave.
The one that sent energy stocks parabolic.
For sure. The core story, and it was on every major financial headline, was the U.S. operation leading to the capture and arrest of Venezuelan President Nicolás Maduro and his wife, Cilia Flores.
And right away, they were in a New York court, pleading not guilty to narco-terrorism charges.
And the market reaction on Monday was it was decisively bullish, a huge relief rally.
Absolutely. The Dow just surged, was it almost 600 points?
Nearly 600, yeah. Closing at a new high right near the 49,000 level. And of course, the S&P and the NASDAQ also had really strong gains.
And if you look at the sectors leading that charge, it tells the whole story, doesn't it?
It does. Energy, financials, and consumer discretionary. Financials were huge. Goldman Sachs up nearly 4%.
JP Morgan was up 3%. Both hitting all-time intraday records. Just, general market excitement.
But the real driver here, the catalyst, was oil. It was all fueled by President Trump's promise that U.S. companies would step in immediately to rebuild Venezuela's completely wrecked industry.
Right, so the big question for investors becomes, who actually wins this? Who benefits right now?
And logically, you'd think it would be the companies that got kicked out and are still owed billions, like ExxonMobil or ConocoPhillips.
Right. Conoco still owed over $8 billion from when their assets were seized back in 2007. So why did the market immediately jump on Chevron?
That's the key question.
And it's this critical difference between a political promise and, the existing legal reality on the ground. The immediate winner, structurally, is Chevron. Their stock, CVX, climbed over 5%.
So why them specifically?
Because they are the only major U.S. oil company still operating there. They have joint ventures with the state oil company, PDVSA. They had this special license from the U.S. government that let them keep doing minimal work while everyone else was sanctioned.
Ah, okay. So they have a massive head start.
An enormous head start. JP Morgan analysts pointed this out right away. It's a first mover advantage because they already have people, they have facilities, and crucially, they have a legal framework already in place. They don't have to start from scratch.
So the market isn't waiting for politics. It's betting on the company with the pre-existing plumbing, basically.
Exactly. And beyond the majors, you also saw this huge surge in the supporting cast, the oil field services companies.
Right. Absolutely essential.
Companies like Halliburton and Schlumberger, they jumped around 8% because the big guys can't do anything without them. Venezuela's infrastructure is just in total disrepair.
2 decades of neglect.
It's just, yeah. We're talking about massive repair programs, fixing old pipelines, bringing in specialized rigs. They're the crew that has to clean everything up before the real work can even begin.
And here's where it gets really interesting, where Venezuela's specific geology gives a unique advantage to a certain part of the U.S. market. The refiners. It's not just about getting oil, it's the kind of oil.
That is such a crucial detail, and it's often missed in the big headlines. Venezuela's oil is heavy and sour, so it's dense, high in sulfur.
And the U.S. Gulf Coast refineries are basically built for that stuff.
Precisely. For decades, that's what they've imported. They've invested billions in these specialized desulfurization units to handle that exact type of feedstock and turn it into gasoline and jet fuel.
So a cheap, nearby source of the exact crude they're optimized for means their margins could just explode.
Exactly. I saw a note that heavy sour oil makes up about 60% of U.S. imports. So refiners like Valero Energy, their stock jumped 9.5%. For them, this is a huge, huge win.
Okay, this all sounds incredibly bullish. Oil's near 58 bucks a barrel. But let's pump the brakes a bit. Let's get into the enormous caveats here.
Oh, they are massive.
Venezuela has the world's largest proven oil reserves, 303 billion barrels. But the sources are all saying the same thing. This rebuilding effort is gargantuan.
It's almost hard to comprehend the scale. Rystad Energy put out an estimate just to keep the current, depressed production of 1.1 million barrels a day going. That requires $53 billion.
53 billion just to tread water.
Just to tread water over the next 15 years. If you want to get back to their peak of 3 million barrels a day by 2040, that number balloons to an estimated $183 billion.
183 billion. Just to put that in context for you, that's more than double the cost of the entire U.S. F-35 fighter jet program so far. This is nation-building money.
And that's the long-term risk. I mean, oil investments are 30-year projects. Companies need total certainty on the legal and fiscal rules, and right now there is zero certainty.
Right. And then you have the White House suggesting U.S. taxpayers might reimburse some of this, which just adds another huge layer of political risk to the whole thing.
It does. This optimism is based completely on future political stability.
That 30-year commitment, all that capital, it really makes you think about where capital is flowing right now. And that takes us from geopolitics to the innovation at CES 2026.
A perfect pivot. The consensus from the tech reporters is that this year's CES is just all AI, all the time. It's not a theory anymore. You're seeing it in smart glasses, in humanoid robots like GNE.01.
Which is powered by AMD chips, right?
Exactly. And the big narrative is that this AI arms race is moving from the big data centers out to the edge, into our laptops and PCs. And AMD's CEO, Lisa Su, she used her keynote to launch a direct assault on both Intel and PCs and NVIDIA in the data center.
Let's start with the PC side. What did they announce?
They unveiled their Ryzen AI 400 series chips. They're designed to go head-to-head with Intel's new Core Ultra 3 processors.
And what are the specs that really matter to investors?
Well, you've got up to 12 high-performance CPU cores, integrated graphics. But the real star of the show is this new dedicated hardware, the Neural Processing Unit, or NPU.
Okay.
AMD is boasting that this NPU can hit up to 60 TOPs. That's trillions of operations per second.
60 TOPs. And what does that mean in simple terms?
It's a measure of how fast that chip can run AI models right there on your laptop locally without calling the cloud. So things like real-time translation become instantaneous. It's a huge deal for reducing latency.
That focus on the edge is important, but the real headline grabber was the challenge to NVIDIA in the data center.
Oh, absolutely. Lisa Su unveiled what they're calling the Helios AI rack, and it's explicitly designed to compete with NVIDIA's systems.
How so?
Specifically, the Helios system is engineered to match NVIDIA's latest NVL72 setup. It uses 72 of AMD's new MI455X chips. It's a clear signal that AMD isn't just making powerful chips, they're building the whole enterprise-ready solution. That's been NVIDIA's key to dominance.
And AMD is obviously betting on an absolutely exponential growth curve based on their forecasts for the next generation.
They are bidding huge. They announced a forecast for their upcoming MI500 series GPUs, predicting up to a 1,000 times increase in AI performance.
1,000x? I mean, that sounds like classic keynote hype. Is there any real-world context that makes a jump like that even seem plausible?
It definitely strains belief, but Sue put it in context. She said they need to increase global computing capacity by 100 times in the coming years.
And why is that?
Because the estimate is that 5 billion people will be using AI every single day within the next 5 years. So that 1,000x goal, as ambitious as it is framed as a necessity. It tells you AMD knows it has to shock the market to really challenge NVIDIA.
Speaking of challenging, let's look at the stocks. NVIDIA is still the giant, a $4.5 trillion market cap versus AMD's, $359 billion?
Right, but the momentum story is really telling. Over the last 12 months, AMD's stock is up 76%. NVIDIA's is up 30%.
So investors are clearly rewarding the challenger.
They are. And this whole AI boom is lifting the entire supply chain. TSMC shares jumped after Goldman Sachs raised its price target, specifically citing this multi-year AI demand.
So if we connect all this back to the big picture, these huge tech and geopolitical shifts all depend on the macro environment. Let's talk about the Fed and the U.S. economic calendar.
Right. We're finally back to the normal flow of critical data this week.
And the main event is Friday, the non-farm payrolls report.
It is. The consensus is for a pretty modest gain, somewhere around 54 to 55,000 jobs added in December. and the unemployment rate is expected to tick up just a little to 4.7%.
And those labor numbers are part of a bigger puzzle for the Fed, right? They're trying to figure out if the economy is soft enough for them to start cutting rates.
Exactly. We're also watching the ISM Manufacturing Index, which already showed a contraction. That was the biggest slowdown since 2024. And that's a big deal because it brings in recession fears, which puts pressure on the Fed to cut.
So you've got that, plus ISM services, ADP payrolls, the JOLTS report. All of it feeds into whether investors are right to expect 2 rate cuts this year.
It's all about that rate cut expectation.
Now let's look at the currency market, because the reaction to the Venezuela news was really counterintuitive, especially for the U.S. dollar.
It really was. The dollar index struggled, even with this major U.S. geopolitical move.
Why was that?
This is where the macro data just won out over geopolitics. One analyst, Juan Perez from Monex, he noted the buck is losing appeal as a safe haven. And the reason was that disappointing ISM manufacturing data we just talked about, it suggests the U.S. economy might be sluggish.
So a shaky-looking economy at home trumped the show of strength abroad.
It did. But investors were still looking for safety and opportunity, and you see this confusing mix of risk-on and risk-off moves.
Right, like in the metals market.
Exactly. Gold rallied significantly, trading up towards 44.60. Silver soared 5 to 8%. That's a mix of geopolitical risk and those rising bets on Fed rate cuts.
And then on the complete other side, you see the risk on trade in emerging markets.
It's fascinating. The MSCI Emerging Markets Index rose 1.6% to a record high. A lot of that was driven by the Asian tech stocks in the AI supply chain, like TSMC.
But also the commodity currencies, right? That ties back to our oil story.
It does. Currencies like the Colombian peso and the Brazilian real climbed.
Yeah.
Now, the Colombian peso initially dropped a bit, due to political tensions.
Right, given Colombia's complicated relationship with the U.S. and Venezuela.
But it quickly rebounded. And the perception seems to be that renewed U.S. investment in the region's energy infrastructure is a good thing for everyone, even with political friction. The economic lift.
Even Bitcoin got in on the action.
Yeah, a climb near 94,000. Some analysts point to the rising copper-to-gold ratio as a macro signal that often points to a shift toward risk-on conditions.
Wow. So we're starting the year with this dizzying dual focus. You have the massive potential of Venezuela's oil, which is wrapped in political risk and needs incredible amounts of capital.
And at the same time, you have this rapid-fire, futuristic innovation at CES that promises to completely redefine computing.
And that's the tension for you to think about this week.
It is. And here's the final thought to connect it all. AMD's CEO is calling for a 100x increase in global computing power to meet AI demand. That requires an unprecedented amount of capital and resources. So the question is the market's huge enthusiasm for an AI future, a future that is incredibly energy hungry, is that sustainable if the basic energy needed to power all those data centers is locked behind these complex 30-year geopolitical risks, like what we're seeing in Venezuela?
The energy that powers the future is still tied to the political risks of the past.
Deeply tied.
That is a crucial connection to make between the two biggest stories of the week. Thank you for making sense of these massive interconnected forces. For those of you following along, we'll see you all tomorrow morning with new headlines from major financial magazines.